The government's coming for another corner of the food and drink industry, and this time it's milkshakes and plant-based drinks that are in the crosshairs. A new consultation just dropped in on the soft drinks industry levy, and if you're in the drinks industry, especially with milk-based or alternative products, this is going to cost you real money. Now, this is all part of the government's ongoing drive to tackle obesity, and the aim is to make sure that the levy is doing its job of encouraging companies to reformulate their drinks to contain less sugar. What could this mean if you're in the soft drinks industry? Well, this is going to be a big one. It's all part of the government's ongoing health agenda, tackling obesity by taxing sugar. Right now, only soft drinks with over 5 grams of sugar per 100 millilitres are hit with the levy, and milk-based drinks are exempt. So your average chocolate milkshake or high-protein plant-based drink with added sugar, totally fine under the current rules, but not for long. The government is proposing 2 key changes: lowering the sugar threshold so more drinks get taxed, even at moderate sugar levels, removing the exemption for milk-based drinks and milk substitute drinks, meaning products that were never taxed before could suddenly face big levies. Let's break that down into an actual example. Say you're selling a 250 milliliter milkshake with 12 grams of sugar per 100 ml, which is pretty standard, currently no levy, but under the new rules, it could be taxed at the top rate of 24p per litre. Now that's not huge on its own, but I think it's quite a lot of money. But if you're producing hundreds of thousands of bottles a year, that's £6,000 straight off your bottom line. And for many small businesses, that profit margin is going to be gone. This is all happening because the government wants to keep pushing businesses to reformulate their products. The goal is to cut down the amount of sugar people are consuming on a daily basis. If the drinks with added sugar are taxed at the same rate as sugary carbonated drinks, we could see a major shift in the industry towards healthier products. So what does this mean for businesses in the soft drink sector? It means if your product is loaded with sugar, you better start seriously thinking about reformulating. Because if these changes go through, and they probably will, that tax exemption you've been relying on could vanish overnight. The levy may very well be a real cost that could eat into your margins, force a price hike, or make your product less competitive. Reformulation might not be easy, but it could be your best move if you want to stay out of the firing line of HMRC. On the other hand, if you've already started shifting towards healthier, lower sugar recipes, you are way ahead of the curve. Keep going. Being prepared will mean you won't be scrambling around later. Stay tuned and keep an eye on this one when the autumn budget arrives, because this could impact how your business moves forward. Stay on top of the latest tax changes and avoid missing anything that could impact your finances. Make sure you check out the other tax update videos. I cover updates that matter most to self-employed people and small business owners, including these major shifts that are coming in 2025. One you definitely don't want to miss is shocking tax changes you can't afford to miss UK 2025. Give it a watch and make sure you're prepared for what's ahead.